You should. So whether you're because it's going to translate even outside of home buying. At some point, you're going to apply for something. You're going to be in.
You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.
All right, guys, welcome to the YMA Nation Podcast, Real Estate Wednesday.
Hello.
It's her show.
Yes.
It's her show, guys. If you're on right now, make sure you like, comment, and
Subscribe.
I am Joe Wallace, and this is
Rebecca Wallace.
Guys, down in the comment section, make sure you hashtag YMA Nation so you can go into our monthly cash drawing. We're giving away free cash every month.
Cash.
All you have to do is just hashtag YMA Nation down in the comment section, guys. Also, down in the description, on Monday, we talked about Black Caesar. The streams are doing this.
Good job.
Make sure down in the description you guys check out Black Caesar, that hot new single by Joe Wallace featuring CeeJ. All right, you ready?
Yeah.
Okay, I'm not done.
I know. That's why I'm just sitting here.
The last thing, guys, is today's show is brought to you by the Pyramid Group with Keller Williams. If you are in the market for buying a home or selling a home, you can contact the Pyramid Group with Keller Williams. Their number is 864-249-1437. Again, that's 864-249-1437. The Pyramid Group with Keller Williams. Let's go. What are we talking about today?
Why credit is key for buying or selling?
Why credit is key. If I'm selling a home, I got to have good credit too?
Yes.
I know. Let's go. Let's hear it.
Yes.
Let's go.
You have to have good credit.
If you don't have good credit, you guys need to contact Masters Credit. We just plug in every company. Contact Masters Credit Consultant, www.masterscredit.com, 864-249-9466, Masters Credit Consultants. Let's go into this topic. Let's see what good information we're going to provide today.
So, why credit is key for buying or selling? Well, you have to have your credit scores where they need to be when you go to a lender to be able to get a pre-approval to buy.
Right.
So, we're going to get into different type of scoring and what you need to be looking for, what your credit scores need to be, your credit worthiness, and get into how to analyze the debts. And I came up with this because a lot of clients really just don't understand what like debt to income is or how to analyze the amount of debt that they have. They look at it as a total, as a whole. Well, I'm carrying $40,000 of debt.
Right.
How does that impact my debt to income ratios? All of this also goes into your credit as well, because that's how your scores are generated.
Right.
Is your debt to credit ratios, your how much utilization you're carrying on your credit cards. So
that's important. Disclaimer, the knowledge that she gives you guys today may vary depending on the lender that you go to.
It does. It depends on the lender that you go to. And I am not a lender, but I am a credit specialist
and a licensed
realtor.
Credit specialist and a licensed
realtor.
Yep.
Yeah. So I'm licensed in numerous things. And so what I will say is scoring models vary. So you may say, well, I check my Credit Karma, and my Credit Karma, I say Credit Karma because that's the most popular thing that we hear clients say. So not saying anything bad about Credit Karma. I'm just saying that's what clients utilize the most. And that's what they're using to say, hey, this is what my credit score is. So when they go to the lender and the lender pulls their credit and it's 30, 40, 60, sometimes 80 points lower than what they're seeing, they're like,
Credit Karma's wrong.
What? Why is it like this? And even with credit monitoring services, depending on what the scoring model is, will dictate how your scores fluctuate. Is that really truly fair to the consumer? No, it's not. What can we do about it? Nothing right now. But just try to have an understanding that, guess what? If your credit is the absolute best it could be, no matter what scoring model you use, guess what? You're going to have a good credit score when you go to get it pulled for anything. So the main point of this is have good credit regardless.
Right.
Always.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, "It's just a credit score, relax."
Are you checking your credit score?
Huh? Hold on.
And Kohl's, and it's gonna be like the holidays, and it was like, hey, if you apply for this credit card right now,
you get 25% off.
25% off along with this, I don't know, something else. But
Right.
you're thinking, man, I'm about to spend $300 right now, and 25% off sounds really good because that's almost like $80. I just calculated that in my mind real quick, but around that amount,
Right.
I'm going to apply for
I
it, and
wanna
then
apply for it.
you're going to get declined if you don't have your credit up to par.
Right. So, the scoring models do matter if you are carrying a lot of negative debt, if you're carrying a lot of collection charge-off negative debt, if you're carrying repos on your credit, things of that nature, then the scoring models are definitely going to matter. If you're carrying a lot of medical bills, that's one of the top things that we see on people's credit is medical bills and repos and student loans. Yep. So if you keep your student loans in a positive status, don't get any repos if at all possible, and pay your medical bills. Go ahead.
If you guys are experiencing financial issues, don't be afraid to call the lender, especially with student loans. Like, you would be amazed. Like, they're there to help you. Like, hey, I'm out of work for X period of time right now, or, due to COVID, I was out of work in the job that I'm in now. I don't make X amount of where I made last year, so I can't afford this $200 per month payment. Like, they got so many programs out there to help you. Face your problems head on. Don't just ignore the problems.
Until it comes to a point. What we really see a lot of is, well, I need a pre-approval in 60 days.
Or my lease at my apartment ends in 3 months.
In 3 months.
Yeah.
And so you have 3 months to try to rectify things that have happened over 3 or 4 years. And sometimes, depending on what's on there, that may be doable. But if you're waiting out the chances of doing that, I mean, you have a lower chance than if you were just making sure that you were in a good place.
Get ahead of it. I will always say, get ahead of the problem. Face it head on. Be brave. Be brave. Face the problem.
While we're going through these things that are on your credit, why is this important? Why am I bringing out these topics? Because when a lender looks at your credit worthiness, and they're going to look at your payment history.
Right.
Payment history is key. I mean,
even on the FICO scale.
Even on FICO.
Number one. Payment
history. Some lenders, if you have a late payment within the last 12 months, they won't approve you. Now, there's lenders that will, but like if you just had a late payment last month and you need a pre-approval in 60 days, unless you can get that late payment forgiven, it's going to be harder for you. That road is going to be harder for you.
Yes.
Utilization, keeping your credit cards under 10%. Keep your credit card balances down. If you don't know how to use them, if you don't understand what that means, contact Masters Credit. They will tell you how to use them, how to pay them, everything that you need to do
How to maximize
on your
points.
points.
And we say 10% online, they always say 30% or less.
Right.
But if you want to truly maximize and gain the points that you could possibly gain from that score, from that on the FICO chart,
Right.
chart, to be able to maximize on your debt to credit ratio, 10% is a good goal.
Right. So all of that will help you to maintain your scores and build your scores. Now, we're going to talk about the debt just a little bit.
Okay.
And the importance of what the lender looks at for this. So most people have a car loan, right? So your monthly payment for your auto loan is going to be counted against your debt. Not how much you owe on the car, but how much you pay monthly on the car. Okay? Mm-hmm. Your student loans. So as of earlier this year, if you're on an income-based repayment program, they have additional help. They're not counting that 1% anymore in some cases. So you can get with your lender and say, hey, I heard, FHA, different loan products are counting these student loans differently in certain case scenarios.
Go ahead.
Student loans. And then.
Oh, before you move on, you said 1%. So you mean if I have $100,000 of student loans, 1% of that is
$1,000.
$1,000. They're going to count $1,000 against my income.
Against your income.
See.
Yep.
I mean, I'm saying that because I'm sure someone is out there
Right.
like, what do 1% means, right?
Right. So if you're able to have a lower monthly payment on your student loans and they're able to count that, that will be a tremendous help. They don't count the amount of student loan debt. They're going to count the payment amount per month. So this is where the negative stuff really starts to hurt you, right?
Okay.
Because most lenders, I'm not a lender, but I have great relationships with lenders who tell me all of their nice little requirements and secrets. So in order for them to analyze your debt to credit, if you have negative debt, what that means is it's a collection charge-off showing a balance, or you have collection accounts. What they do is they take the total of those accounts and they count 5% of that total against your monthly debt to income.
Okay.
So the less negative debt you have, the better it helps you. You only want that positive. You don't want any negative debt because it's going to eat up your buying power and your debt to income ratios.
They'll have to go back and to understand that, like the buying power and how that impacts it. But
Yeah.
that's on the previous show.
It is. So you have to really break down, what am I spending per month per item that is on my credit?
That's on your credit.
That's
so don't
on
think
your
like,
credit, not your rent,
yep.
not your power bill,
Yep.
not your water bill,
not your cell phone bill.
not your cell phone bill, not your car insurance.
Right. What's on your credit.
Was on your credit, your monthly payment, right?
Right.
And I wanted to talk about this because I just had a client I had to do this with.
Mm-hmm.
And so I'm like, if this client has all these questions, I'm sure there's a lot of people that probably have these same questions, right?
Tens of thousands, right? I always say that if one person have the question, there's millions of people in this country. So you can guarantee there's like
right.
tens of thousands of people that had the same question.
And this is the importance, too, of, having an agent that is savvy all the way around. Because a lot of agents don't get into the lending part of it. They send you to a lender. Either you're approved or you're not approved.
Oh, yeah.
And, it's not the agent's job to understand credit. It really isn't. It's not the agent's job to understand your credit. It's not their job to know what your credit score is. They don't know anything about your income. They don't know what your debt to income ratios are. So you can't be like, well, I just have a bad agent, because your agent doesn't know all of that, because the agents aren't taught to know that.
Right.
The agents are, they have the information that you tell them. They're there to service you in buying a property, giving you information about that property, and the market for you to buy or sell your house, right? So when you do have an agent or have one that does build relationships with their lenders and can get you with a circle of people that can help you through the process, it puts you in a much better position as a buyer and a seller. Because guess what? If you sell your house and your credit isn't where it needs to be, you're going to have to rent until you get your credit where it needs to be.
So from a selling perspective, if you sell your house, then obviously you need to go and get a pre-approval to buy a new house.
So, and what I recommend is if you're looking to sell your house, I would get a pre-approval before I put it on the market.
Oh, absolutely. Yes. Because you
And
do not want to be stuck.
Because they can pre-approve you based on the contingency to sell your house.
Mm-hmm.
But at least then you have an idea, hey, I know this is where my credit is. I know that I can get pre-approved for this amount of money, but I have to sell my house to get pre-approved for this amount of money. Now I can put my house on the market.
Right.
That's it.
That's it.
Call Masters Credit Consultants, 864-249-9466.
She's supposed to be saying all this throughout the outro, but she wasn't going to hit the button.
No. I wanted them to hear something else.
Oh, okay.
Call, ask about the Pyramid Group package. We have a package especially for clients who come through the Pyramid Group, and they will get you. You can call straight to Masters Credit, or you can call the Pyramid Group at 864-249-1437. Either department can get you to where you need to be to take advantage of that special.
Or you could just call me at 777-9311. Don't call me.
No.
Somebody out there like, what was that number again? I heard the 7. Rewind that real quick. 77. That number don't work.
That number don't work.
Joe,
You done gave
Joe
me the
got
wrong
me.
number.
Joe got me. Guys, thank you so much for watching
Yes.
Real Estate Wednesday. Hope you guys learned a lot. And we will see you guys on Friday for Sports Talk.
Friday.
With the boss's view, you gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.